I'm hoping to retire at the age of 44. That's my plan.
Today, we will meet an options trader from Canada. He will share 3 of his main strategies to generate steady income. It is one day trading strategy, one weekly strategy, and one strategy that combines a very long perspective with the short. Welcome, Dennis Maritim.
Thank you, John. Thank you, John.
So, give us the 40-second version of what you try to achieve when choosing your option strategies.
I've been trading options since 2017. In 2022 is when I gravitated towards the tasty trade philosophy of selling volatility and letting probabilities work over time, and taking advantage of that theta decay. Prior to that, I was buying calls and buying puts, and it's a strategy that works until it doesn't. So right now I'm primarily a net option seller, and my strategies involve generating steady cash flow while protecting my downside.
So, tell us a little bit about yourself as an option trader and person.
Yeah, so outside trading, I'm a mortgage broker. It's a career that has taught me discipline and risk management. And there's skills from mortgage brokering that I apply directly to trading, and there's skills from trading that I'll apply to my work as a mortgage broker. My goal is not to gamble or swing for the fences, which I tried when I was buying calls in the beginning, but really just to build a portfolio that compounds steadily over the long term, small wins here and there, and then grow the account to the point where hopefully I can retire and record people doing videos like you, John.
All right, and what is your goal? When do you want to retire?
I'm hoping to retire at the age of 44. That's my plan. Hopefully,
How many
sooner
years
than
you
that.
got now?
I have 7 more years.
Seven more years. That's an ambitious goal.
It's quite ambitious. It's quite ambitious. But who knows? Maybe I won't retire. I'll just retire and sail into the sunset as an options trader.
Where do you live?
I live in Vancouver right now, but I'm originally from Winnipeg.
So, we will talk about 3 of your options trading strategies. But before we delve into those, is there any common denominator?
Yes. So the common denominator for me in my strategies is selling volatility and putting time decay on my side. So I build trades with high probabilities of success, and then I manage them with discipline. And the main discipline has been keeping position sizes under control. So no single trades with huge lots that could derail my plans.
And we are going to talk about 3 of your strategies, but how many different strategies do you trade?
So I trade 3 different strategies. One of them being weekly ETF put credit spread selling. And then the second one is a zero DTE, SPX, iron condor. And then the final one is, buying leaps with covered calls every week to collect some income.
So let's start with your weekly ETF selling. Describe a bit more in detail what this strategy is.
Yes. So every Monday I'll sell a 40 delta put on SPY, QQQ, IWM, and DIA. And I'll pair that with a cheap 8 delta put just to hedge. Expiry is going to be the Friday of the same week. And I'll closely manage it. But then the idea is I don't close it. I just let it expire. But I also hope to get assigned. And the reason why I'm comfortable with assignment is because I can transition it into selling covered calls the following Monday. And this has been one of my most reliable source of weekly income. And I've been trading this strategy since July 7th of 2025.
So maybe we should bring up an example here of a trade. We are recording on September 3, and here we made a trade like this for September 9. Anything you would like to comment on what we see?
Yeah, so it's a strategy that if you think about the buying power reduction from a trade like this, usually it's not a lot, which then increases your return on income. But the main idea here is you're at the 40 delta, which is very close to at the money. But if you get assigned with the positive drift, which this whole trading philosophy is if you get assigned and you trade covered calls the following, it will work for you, especially in a bullish run, like the one that we've been in the last few weeks. So the reason why I buy the 8 delta hedge is because I want to minimize my buying power reduction. I don't want to go naked, but essentially, if you think about it, it's pretty much naked because at the 8 delta, you're really so far away from the short that it's almost like you're just naked. Yeah.
Maybe we can see how this trade develops as the week passes until the expiration, and we see the break-even points is being brought a bit down, and this is how it will look at expiration. So you let this expire. That is your main strategy, if I understand.
That's my main goal. Yeah. I do not buy it back the Friday off. The only time I'll try to manage it is if there's a downward move that has broken past my short and my long. I'll try to take the profit from the long and let the short side expire. The reason I do that is because if you hold both sides till expiration, the brokerage will reconcile it, meaning they'll just close it and whatever. You wouldn't be able to buy, or they won't pass the shares to you because you've crossed the long, is what I'm saying.
When will you close the long? If the market falls down, but do you have any rules for when you will take profit?
I'll make sure I close it before the Friday. Yeah, I'll make sure I close it before the Friday is done, before the market ends on Friday. Yeah.
So if I understand it correctly, you will let it expire, you will take the shares, but you will have that as an extra boost if the market falls.
Exactly. Yes.
You do this every week, and how do you select which underlying you want to do it on?
I am very disciplined on the 4 underlyings: SPY, QQQ, IWM, and DIA. And it's just my idea of capturing the whole market while playing products which I feel are relatively, they carry some type of positive drift.
But what is the worst thing that can happen with this strategy?
Yes, that's a very good question. So the worst thing that can happen is Liberation Day. The market just decides to go south and keep going south and keep going south. When that happens, it then questions, do you really want to sell calls on Monday? Because you will get assigned, but do you want to sell calls on Monday, especially at a position where you're not even making any gains if you get assigned on that call? So you may have to just wait to see that the market picks up to the point where you could start selling calls again. So it does work when there's a bullish run, but if there's an adverse move downwards, you may have to either take losses to close your positions and sit on the sidelines for a while, or just continue with it with discipline, hoping that if we're making a downturn, at least you're adjusting your deltas downwards. You're selling at a lower price than what the stock is currently trading at.
How well has this strategy been working for you so far?
So far it's good. I've been trading since July 7th, 2025. I've made about 13,000 since then. And this is on maybe buying. So I made 13,000 on an account size of about maybe 190,000. And then the remaining cash, I just leave it for other opportunities.
So that's quite good results so far.
Not bad. It's not bad. So I'm just waiting to see how long I can take this. And my biggest test, I guess, will come when the market just decides to go down, and I'll figure things out when that happens. But for now, if the drift continues, the positive drift continues, we'll ride it.
You do this on all the 4 underlyings, all the 4 ETFs every week, if I understand it correctly.
Every Monday, yeah, religiously. Every Monday on all the 4 ETFs. And then I determine size based on how much buying power or how much cash I have to take assignment. Because even though I have portfolio margin, I don't want to stretch my margin too much by getting assigned on more than the volume of cash that I have to actually buy the shares, the underlying shares. So my bids are my lots are tend to be small, maybe one or two.
Have you been assigned often?
I've been assigned twice. So in the 8 weeks that I've been doing this, I've taken assignment on 2 out of those 8 weeks. And sometimes assigned on, actually, the only time I got assigned on all 4 products was once. But occasionally I'll get assigned on 1 of the 3 or 2 of the 3. But the only time I got assigned on all 4 of them was on one week where the market closed really low on Friday.
Who would you say this type of strategy is best suited for?
I think this strategy is best suited for somebody who is extremely busy, doesn't have the time to follow and see what companies are reporting earnings, what the IV rank is. You're busy with other parts of your life. You do have some cash. You know there's positive drift in these products, and you want to take advantage of that. So this strategy is ideal for them. For somebody who's trying to grow their account, this may not be it. But for someone who's grown their account to a relatively, let's say, medium-sized level, and you just want to generate income over time, this strategy would be a deal for them. And you're busy; you don't have time to follow everything that's happening in the market.
So let's move to your zero DTE strategy. How do you trade zero DTE?
Yes, so I trade zero DTEs on SPX, and I'll trade iron condos. So what I'll do is in the morning, let's say around 9:30 or 10 a.m. after the market is open at 8:30, I will. After the market opens at 9:30, so around 10:30 a.m., I'll sell a zero DTE SPX iron condor with a 20 delta, 20 deltas on the short, and $10 wide on the wings. And my idea is to close it at anywhere between 25 to 50% profit. But the most important thing is I'll put a stop loss. So I'll put a stop loss at 100%, meaning if I sold it at $2.50, I'll put my stop loss at $5. But ideally, if I sold it at $2.50, I'll look to buy it back at $1.25 or anywhere between 25 to 50% profit. But I've been noticing that I've been maintaining that 50% profit range. I haven't held a single zero DTE SPX iron condor till expiry. I just don't have the guts for it, but I'm hoping one day I'll do that.
And you put on only one trade with this strategy each day?
Yes, every day I'll do the trade and I'll record my wins and losses and I'll take notes as to, what happened. I'm thinking of making a tweak on this strategy though, where if SPX opens really low or it takes a downturn, I may not do an iron condor. I may instead sell a put credit spread if it does. And the opposite if it spikes on a given day. Let's say it goes way higher, then I'll sell a call spread. That's one tweak I'm thinking of making, but it's still in the work right now.
So 20 delta, 10 width, and about a half hour, 1 hour after the market opens. How much premium are you typically able to collect with these rules?
So I usually collect anywhere from $2.10 to $2.60, depending on the time when I put the trade in. And I'll do 2 lots. So when I started, I was just doing a 1 lot. I'll do 2 lots, mostly for my sanity. If I trade too big, I won't be able to do anything else during the day. I'll just be staring at my screen the whole time. And it's a loss that I will be comfortable with at the 2 lot level. Anything higher than that just becomes too big for me. But as the account size grows and my risk appetite grows, I should be able to take larger sizes.
How do you do your stop loss? Do you put it on the full iron condor or each side separately?
I'll put the stop loss on the full iron condor.
And how has this strategy worked out for you? How long have you been trading it?
It's been okay. It could be better. I've had a few times when I had to take a loss. Actually, I've been trading this strategy since August 20th, 2025. So it's a fairly new strategy. And I've had, out of the 10 occurrences that I've had two losses, all at 100%, just meaning my stop loss got triggered, and the rest were wins. And I've been capturing about 50% profit. So I've been getting in at 9 a.m. By 1:30, I'm out in all the trades.
And you have such tight wings with this strategy that also the wings serve as some kind of limiting your risk in case the stop loss would not work.
Exactly. Although I'm debating whether I should spread the wings to 20 or 30, 30 sized wings, but we'll see how the numbers go.
Then we have your third strategy, that is leaps and combining that with short-term covered calls. Describe how this strategy works.
The way this strategy works is I'll buy leaps on QQQ or SPY with expiry dates into the 1.5 to 2 years DTE. And then every week I'll sell calls against them, hoping to generate some income. And if I ever get triggered, which I hope not to, if I ever get assigned, which I hope not to, I will just take the profits and then redo it again. But the idea is to keep the leap until about 180 DTEs and then sell it, then take the profit and then reopen a new one and continue the same thing, just selling calls on a weekly basis against them.
What delta are you using for the calls you sell?
On the calls I sell, I'll stay anywhere between the 10 to 15 delta. And on the leaps that I buy, I will go at the 90 delta.
Okay, so the leap will basically serve as 100 shares.
Exactly.
How has this strategy been working out for you?
It's going okay. For now, I have been keeping records of the weekly premiums. It's not a lot, but it's been okay so far. I haven't been assigned because I'm trying to stay away from getting assigned by hovering in that 10 to 15 delta zone. But there's been times when I've been very close to getting assigned and my shares called away.
But what's the worst that can happen with this strategy?
I think the worst thing can happen with this strategy is if your leap decays, meaning the stock takes a downturn. That's the worst that can happen because all the capital that you put out to buy the leap could easily get eaten out by the decay, which is why I try to close my leaps with at least 180 days remaining.
But how do you plan to deal with it if we get a major drop in the market?
I think if we get a major drop in the market, it will just be hoping that it comes back up. Because if I still have time, I will not close the leap. I'll just, wait for the positive drip to come back in my favor. But if I'm at a point where I have to cut my losses and take whatever I need to take out, I'll just close it. But yeah, if I still have time, I'll wait.
And this strategy, you just keep repeating and repeating until the longs get at that DTE where you feel that it's good to sell them and buy new ones.
Exactly.
So this is essentially a poor man's covered call.
You're very right. Yeah, it is a poor man's covered call.
How long have you been trading this strategy?
So for this strategy, I started on July 14th, 2025. I've been collecting about, let's say, 100, anywhere from 100 to 150 every week in covered call premium as the underlying leap that I bought balloons as well as it grows and waiting for me to take profit when the time comes.
I noticed that all the three strategies we have discussed today are quite new strategies for you. Does this mean that you have changed your trading style recently?
Yes, yes. These are definitely new strategies for me. When I started trading, I was mostly looking for opportunities to buy into weakness. So find out what's happening with the stock. If it tanks for whatever reason, and I know it's going to pull back, and the IVs spiked up, I'll sell puts on it, or I'll look for broken wing butterflies opportunities or ratio spreads. So I was mostly a volatility trader. Like the first thing I would always look at was volatility. I had info on when Jerome Powell will be speaking, what the expected move is. So I was heavily involved in what's happening in the market. But then when my business started getting really busy, I found that I didn't have time to do all that. So I decided to change my strategies.
And I guess all these three trade strategies, maybe with the exception of zero DTE, are low maintenance strategies.
Very much so. Yeah. Low maintenance strategies. Yes.
Overall, what is your experience with this new style of trading for you so far?
It's given me peace of mind because I don't have to worry about my trades or look at my screen the whole day. I can focus on other things. And the idea that the underlying is an instrument that with history, obviously historical performance does not say anything about what's going to happen in the future. Like it's a product that has positive drift. And as much as the IV might not be at the high levels that I've been accustomed to in the past, at least it gives me an opportunity to take advantage of that quick theta decay, especially with strategy number 1 and 2, selling the zero DTEs and the put credit spreads, the weekly put credit spreads.
I like to ask my guests to put their strategies on a risk profile scale where 1 is very low risk and 10 is very high risk. Where would you put these 3 strategies on such a scale?
I would say the weekly ETF put credit spreads would be a 6 out of 10. And then the zero SPX and Condors, I'd put them at 8 out of 10. So that would be the riskiest strategy. And then the leaps with the covered calls, I would say it's a 3 out of 10.
So let's sum up. How do these strategies fit together?
These strategies allow me to diversify or take different avenues in how I generate income. And I like that they allow me to focus on other things and not be glued to my screen the whole day. And that's why I want to see how long I can carry on with this. And obviously, the biggest test being when there's a downturn that lasts, longer than 5 days.
Who would you say this style of trading is suited for?
I think this style of trading is suited for somebody who's busy, doesn't have the time to follow what's happening in the markets, understands the idea of positive drift, and has an account size that can take assignment and hopefully sell covered calls after assignment.
Dennis, what have been good resources for you to learn about options trading that you would recommend to others?
Yes, I definitely recommend Theta Profits because you learn the different strategies that most people are doing and you get to find which one is most suitable for you. I also recommend to watch the videos from our guys at the Tasty Network. Definitely follow the videos there, Tasty Live. And if you're into reading books, I would recommend reading Options as a Strategic Investment. So Options as a Strategic Investment by Macmillan and The Option Trader's Hedge by Sebastian and Chen.
Good suggestions there, and I am grateful for you recommending this channel to our viewers. We do have a lot of interviews about different strategies and styles of trading. Thank you very much, Dennis, for sharing how you trade with our viewers.
Thank you. Thanks for having me.